Welcome back to Curious Commerce. Today we will discuss about fund flow statement versus balance sheet and fund flow statement versus income statements. Let's begin. Many learners get confused between two important financial statements. One is balance sheet, the second one is the fund flow statement. Both talk about the financial position of business, but they are not the same. One shows the snapshot, the other shows the movement. Today we will clearly understand what is balance sheet, what is fund flow statement, and what are the difference between balance sheet and fund flow statement. Let's make this concept crystal clear. First, let us understand the balance sheet. A balance sheet is a statement that shows the financial position of a business at a specific date. It tells us what the business owns. It means that assets of the business. And what are the liabilities of the business and the owner's capital. It is prepared on a particular date like 31st March or 31st December, quarterly basis or half yearly basis or financial year basis. For example, suppose on 31st March, the asset is 10 lakh, the liability is 4 lakh, the capital is 6 lakh. This is the financial snapshot of the day. Balance sheet shows the position, not the movement. It shows the position of the asset, position of the liability, and position of the capital. Now let us understand the fund flow statement. A fund flow statement shows the movement of funds between two balance sheet dates. It gives the answers from where did funds come and where were the funds used, usually based on the working capital concept. For example, between 2024 and 2025, funds generated from operations is rupees 2 lakh and funds used to buy machinery is rupees 1.5 lakh. This movement is shown in the fund flow statement. Balance sheet always shows the position at the point of time. Fund flow shows the movement over a period of time. The key differences between the fund flow and the balance sheet, let us clearly compare. On the basis of the nature, the balance sheet shows the financial position and static in nature. Related to the fund flow statement, it shows the movement of funds, not only the financial position, it shows the movement of funds and dynamic in nature, it is not static. On the basis of the time focus parameter, balance sheet prepared for a specific date, fund flow statement prepared for a period. As the simple example, balance sheet is like the photograph, fund flow statement like a video. On the basis of the purpose, the difference between the balance sheet and fund flow statement. Balance sheet shows what the business assets and liabilities and overall financial position. In case of fund flow statement shows how working capital changed and sources and utilization of the funds also shown in the fund flow statement. The balance sheets based on accounting equations. Assets should be equals to liabilities and capital. But the fund flow statement based on changes in working capital. On the basis of the usefulness, balance sheet helps to know the solvency, financial structure, and net worth. Fund flow helps to know how funds were generated, how funds were applied, and financial movement efficiently. Let's revise quickly. Balance sheet means financial position at a date. Fund flow statement means movement of funds during the period. Balance sheet is static in nature. Fund flow is dynamic in nature. Balance sheet is snapshot. Fund flow is flow of money. So, learners, now the difference between balance sheet and fund flow statement should be crystal clear. Many learners think profit is increasing, so the company must have more funds, right? But not always. A business may show high profit but still face cash or fund shortages. That is why we must clearly understand the difference between the income statement and fund flow statement. We will make this concept very simple and crystal clear. Let's begin. Let us understand the income statement first. It is also called profit and loss account or statement of profit. An income statement shows the profit or loss of a business during a period. It includes revenues, expenses, gains and losses, and finally gives net profit or the net loss. Right? With example, we should understand. Suppose during the year sales of 5 lakh rupees, expenses of rupees 4 lakh 20,000. The net profit is 80,000 rupees. 5 lakh minus 4 lakh 20,000. The net profit is 80,000 rupees. This is what the income statement tells us. Income statement focuses on profitability, not on fund movement. Now, let us understand the fund flow statement. Fund flow statement shows the movement of funds, means the working capital, between two balance sheet dates. It answers two key questions. From where did funds come and where were the funds used? For example, during the year, fund from operation is 1 lakh rupees, purchase of machinery of 70,000 rupees. This movement appears in the fund flow statement. Fund flow statement focuses on financial movement, not on profit calculation. On the basis of the objective, the difference between the income statement and fund flow statement as follows. Income statement measures the profit or loss. Income statement always focuses on earning performance. Fund flow statement measures the movement of funds and focuses on financial management. On the basis of the nature, income statement is to revenue statement and based on accrual concept. Fund flow statement is based on working capital changes. On the basis of the time focus, income statement shows the performance during the year. Fund flow statement shows the movement between two balance sheet dates. On the basis of non-cash items, income statement includes non-cash expenses like depreciation, provisions, and amortization. Fund flow statement. These are adjusted while calculating funds from operations because they do not involve actual fund movement. Profit versus fund. This is the most important concept. Income statement may show high profit, but fund flow may show decrease in working capital. On the basis of the real life example, imagine a company made a huge credit sales, automatically profit increased, but customers have not yet paid it. Income statement shows the high profit, but the fund position still weak. On the basis of our discussions, income statement means profit or loss, fund flow statement means movement of funds. Income statement means it shows the performance, fund flow statement shows the financial movements. Profit does not always mean more funds. Remember this golden line, profit does not always mean more funds. So, learners, now the difference between the income statement and fund flow statement should be crystal clear, right? At the end of the session, you know that fund flow statement shows the movement, balance sheet shows the financial position, fund flow shows the fund movement, income statement shows the profit or loss. In the next video, we will learn about the schedule of changes in working capital. Please like, share, and subscribe to Curious Commerce. If you read the daily updates about the financial, follow Curious Commerce Financial Management Hub in WhatsApp. Thank you all.